Hello everyone. Today is a bit early, and it's because I spent the previous week off the screen. I went for a trip or a holiday to Japan, so I I haven't actually prepared and managed my watch list or ran any scans this weekend. So I think it could be a good opportunity of demonstrating how do I prepare or do the weekend preparation and scanning for the potential ideas for the upcoming week. Not sure if I can complete it before the market opens, but I'll try. But last week I actually took two new trades on Thursday, the last day of which is Crowd and Corning. And I got stopped out from A Lab on Tuesday. I think it's just I didn't I enter it on this candle right here, but I didn't set the stop at the low of the candle a little bit higher than that, and it stopped me out on Tuesday. That is a bit unfortunate, but it um yeah, that's what you get when you're not setting, like if you're trying to get a tighter stop by not setting your stop at the low of day, that could be yeah, something that you face and you need to accept about it. You trade every night during the trip? Not really. And one thing that I would like to achieve or would like to develop during this trip is trying to sit out and not watching the market at all. Uh, when I was traveling, when I'm traveling, because when I look back, I think I rarely skip any any one of the market any one of the market day since, I don't know, maybe 2022, or I don't know. And I think this is not sustainable, and I need to give myself some time for break or relax, because even uh, on weekends you have to, like, sometimes I will still think of maybe what trade can I improve, anything that I can improve in the in that week, like the trades that I took on Monday or Tuesday of the week, and what are the potential opportunities that I should focus on in the next week. So actually, I'm not letting myself to relax or like escape from the market to take a break, even when I was traveling. So I think it's not healthy and it's not sustainable. And I tried not to look at the market in last week, but I failed to do so. But I still, like, I opened. I didn't bring my laptop. I only trading. I was trading on my phone. Yeah, so I only look at the market on, I think, Wednesday and Thursday. Yeah, it's a big improvement to me. I'm glad that I'm making the changes. I think it's really, I feel really great, and it also helps me to, like, to hold my position for longer, because the Monday and Tuesday it was the pullback, but because I completely didn't open the trading view at all, so I only let my stops working for me. Sorry. Yeah, I only let my stops working for me, and trade on Thursday there could be also another entry. I think a really decent entry on Thursday, maybe even on Wednesday too. But yeah, I didn't, I didn't, I didn't put this into my main watch list, so I missed this one. The UCTT is a pretty strong stock, but I'm not adding it into my watch list because it's hard to trade and it's pretty choppy, and also because I have already a lot of stocks, a really large number of stocks in my watch list, so I think it's like the extra value that I add, that add another stock into my watch list is getting smaller and smaller. So I will be more selective and picky for adding any new stocks right now. And Q has a pretty pretty high potential of being the next true leader, or just like a stock are going up by more than maybe 100 or 200%, maybe becoming a 10 billion market cap stock, because that has a really strong move, and it's also very liquid when you compare with its market cap. And this is a good sign, a strong sign for a small cap or a mid cap stock. I would like to see the volume picking up. So something worth noting is the mega cap semi names are getting a little bit extended right now. You can easily observe that the steepness, the slope of the move is getting higher, gradually higher, picking up some speed. In my opinion, I'm not going to like be very aggressive on taking the semi trades in the next maybe a few days, because the leaders has been like going up already for a few weeks. It does not mean they are going to top here, so they can easily like go sideways and then setting up for another move. When they're starting to go sideways, like the success rate of you taking a new semi trade would definitely decrease, would definitely be lower. I think Penguin is another name, similar to Q. Also, really strong move and very liquid compared to its market cap. So this T1 Energy is also a really interesting name, a small cap, very liquid, and it is kind of solar and also data center theme. It is in the solar data center theme, so it's definitely showing relative strength to some solar names. Like for I'm not sure. First law is strong. Oh, it's actually not. EM is stronger than EMPH. Also stronger than SEDG. But actually, all the solar names are looking pretty good, and it's finding support at the 50 EMA, SEDG at the previous highs on Thursday, and TE is above all the EMAs on Thursday. We got another gap up on UMC. That is going nuts. Fuel cell Thursday pullback is also a really nice entry. I think that it would be like perfect when it goes down a little bit more into the 60 minutes, 50 and 150, but it's already really good, like pulling back into the previous highs. The 9 and 21 are really close. Not sure if the end of VWAP is near. No, but like yeah, I think it's pretty good already. Yes, I think that's it for the leader watch list, and I'm going to skip the potent watch list because I think it's gonna be the simplest similar names appearing on the scans again. But you can see the Penguin and Q as EP. Not sure. I think it depends on the how the market opens, and I don't know. I'm not a fan of buying the gap ups, especially the gap ups after a short space like Penguin and Q has. But maybe I don't know. Do you recommend Kulamagi swing trading school? Yes, absolutely. I saw a guy just like you. Did you pass by Central? Yes, I think you were. I think that's me. This FONC is looking pretty good. Like a cup with handle above the 21, and finding support on the 21 EMA. But this thing is pretty choppy based on the past price actions. So I'm not sure it is a really good buy, but yeah, I think maybe I'm just going to take a try. I think. Yeah, I think I'm not going to buy the gap ups on Kill and also Penguin today. The Kill is gapping up into the previous highs, although it is like back in 2021, it has only 1.5 billion, 1.5 billion market cap at around $7, but now it's already like 4 billion. It's still they're not on the same page again, but I don't know. I'm going to skip it. I think, but it's just my choice, my thoughts. So it doesn't mean the stock can't go higher. So it's please don't take my thoughts or my view or opinions as the holy grail. USAR is shaping up a little bit. It looks pretty good, but I'm not going to buy it today. I think this synaptics also looks pretty good. I think Rivian, the chart looks pretty good, but I don't know. It's not on the right theme. I think so. Market is gapping higher into the previous highs. The Qs is below the 745 level. SPY is breaking out from the previous highs. I don't know. It's like a 50-50. Not the best day for on the index wise, but I don't know. Maybe I will still take one or two trades. It depends. Light looks a little bit concerning. Gradually losing the 50 EMA. Also losing the weekly 9 EMA too. SCDG looks pretty strong today compared to EMPH and First Solar too. But it's now at the 60-minute 50 EMA and the 150. Also the daily 9 and 21. So probably not gonna enter it today. I think. I hope they could go sideways, and if they don't, if they break out successfully today, I will look for the pullback. I don't like buying at the resistance level. It looks like they're breaking out solar names. The 60-minute 9 EMA and 21 pullback is the play, but now it's already too late, and I hope there will be another opportunity in the coming days. I only get around 70% of my positions on TE at around 944. And quantums are also looking pretty good today. I mean, their weekly are looking pretty similar, also at the 9 EMA, 9 weekly. EMA, both the solar and the quantums, and looks pretty solid. And for T, I'm going to use the low of day as my stop. It will be around 2.5%. But this is because I only get like 75% of my initial position. So, and the position is not actually really huge. It's less than 25% of my account. I'm considering buying my remaining 1/4 on this pullback into the anchor VWAP. Oh, I just bought the remaining 1/3, 1/4. The SMTC looks really nice. The only thing that I don't really like is the volume intraday. It's a little bit illiquid. It just yeah, some minor cribbles, but a little bit illiquid intraday. Hard to like size huge. Like it's only getting $1 million volume in a 1 minute chart. Iron looks pretty good, but I would like to see a slight little pullback before it really takes off. Not a fan of buying right here. And I think this small little details could give could make a big difference in the long run. If you keep buying it at the highs, chasing at the highs, and you need to your stop will be like maybe double if I set to stop at the 15-minute candle low. So as your risk and position size too, and that's the pullback. So if I got stopped out for this trade, my risk is only like less than 1%. I mean my stop is less than 1%, and I can easily risk 25 or even 30% of my accounts for this trade, and only using maybe 0.25% of as the risk. Looks like the quantums and the solar names are breaking out and showing some strength today. I wish they are gonna close above the 9, like at least the 9, and hopefully also the 21 EMA by the end of the day, and to set up for the pullback into the EMAs, hopefully. And I wish they are not going like straight up after today. So I think like when the stock is near the EMAs on the daily and the weekly, like the 9 EMA like IONQ, these areas is the best spot to be aggressive, to be fully margined, or like what monitoring and focusing closely, rather than like up there after they have already been a little bit stretched into the upside and not and being far away from the EMAs. I really like my entry on Hood, and I really wish I can hold this thing for weeks and maybe even months. And also Intel. Intel is I really like my entry on this day right here. I don't know, but like hopefully like this too I can hold it for weeks and months. And also Cypher too. Like Cypher the weekly is also looks really nice. I don't know, it's so hard. It's really hard to like trail a position, to hold a position for weeks. Especially when the market starts to pull back, and the faster moving names are going to pull back, may pull back deeper than the market. Like they are going to move faster on the way up and on the way down, mostly. For example, if you have to hold for a 20% drawdown from the peak of the move for crowd, with size, definitely. Because if you only hold maybe like a 5 or 10% position, it's not that meaningful to me. Maybe like I don't know. Maybe I will hold a 10% position in the future, but right now, not a fan of holding a small position. If you missed why I'm choosing TE today, why I'm entering TE today, you can go back and watch the recording, the VOD later today. I did a kind of a weekend scans or like a watch this management in the earlier part of the stream, so you can go back and rewatch it if you have missed it. But it's still too early to tell. It's a good trade or not, because I don't know. My market could find resistance here, I think. So I'm only like, I think these two are the only names that I'm going to trade. And I believe that's as you grow your account larger and larger, I would do like I think I'm going to like split my positions into like smaller pieces and use multiple stops and to reduce the slippage for both entries and stops. Because if your size get larger and larger, and I'm using a tight stop approach, so like my edge will be a less and less dominant if I got a huge size on in one particular name, and especially the smaller cap like TE. Do you risk differently based on the quality of the setup? I think yes, but only like slightly. Um, maybe only if I originally planned to take like using 0.25% risk of my accounts, and the setup is not really that good. Like it's not really maybe an A plus setup, or even an A setup, or it's only like a B. So I'm maybe going to size down for maybe 0.2%, like in using a smaller sizing for that particular trade, and vice versa. So maybe I will risk a little bit more if I think the stock is looking really good, but it's only like a slight difference. It won't be like risking half or risking double of maybe sometimes double if the trade looks really good, but I'm definitely not like only using half size because the trade is not looking that good. Is your risk per trade based on the current equity size or only the size after realized profits or losses? Recently I'm leaning towards the size after the realized profits or losses, like not the current equity, like not including the unrealized profits. I've talked about it in the previous streams. I think the sizing up in last week or the last week. You can go back and rewatch it. If I like double my account from 10K to 20K, maybe I'm only using half of my unrealized profits. So let's say I have a 10K unrealized profits, so I only use 5K when I'm calculating my new position size and risk. So I would use 15K as my current account size to calculate my risk and position size, like the 20K. At the beginning of your career, did you mostly trade micro and small caps or large caps too? Because I started trading in late 2020. It was the market of small caps and the shitcoins. Back then, there were a lot of specs, like they're the companies with no real business and trying to merge with other small companies, like to help the small companies to be listed on the stock exchange. And they are the ones that are moving, like they're making big moves back then. So I was mainly trading them, the small caps and the micro caps back then. But I gradually trading more large caps in 2021 and until now, because I think the large caps are, especially the liquid ones, I think the liquidity matters more than the market cap. Like the liquidity are the higher liquidity names are easier to trade and easier to get in and out. Their moves are generally more linear, more orderly. So yeah, I got stopped out on IRN, but actually here is could be a good spot for entry. IWM is, I think it's at this uptrend line of this. You can say it's a channel. Not really. I'm not really taking serious consideration on this trend line. But if it starts going faster and faster above this trend line, I think you can. I don't know. Maybe we can see something like this, like a really good easy money market back in the late 2020 when after I started trading. I started at I think on 15th of or 12th of October. Here is where I started, and then I got lucky that the market went straight up, tripled my account, and then I think my account topped with the IWM and on the early February, and then that it comes with the 50% drawdown, the slow bleeding. Oh, Tesla is showing some strength today. Opening weak, and then breaking out from the previous day high. All the EMAs and also the weekly EMAs too. That is sort of a character change, and this is the candle I really like, and yeah, Tesla gonna be on my focus list in the coming days, and it looks really nice on the weekly. You couldn't ask for more. I would like to see an undercut and rally on iron now on the 15-minute EMAs. So if it keeps going lower, then probably not gonna re-enter it in the later part of the day. But it's looking really nice on both the weekly and daily. So let's see whether we can find some strength in the lower time frames. I could set the stop at the low of day, but I think it's worth it to tighten my stop a little bit more to reduce my risk. I think this one I'm only risking maybe 0.1 or even, yeah, I think 0.15 or 0.1% of my account. A really good entry to test this out. So the quantums and the solar names are finding resistance and rejecting at the declining EMAs. It's also the reason why I don't like buying in at this at this type of near the EMA, the level that's near the declining EMAs. Hopefully they can go a little bit sideways and not rolling over to the other side. Hopefully, I don't know. We can also the market can do another pullback, another pullback into the 50 EMA. So it's very similar to October 2020. It's a double bottom and before starting another uptrend. So it's very possible. Another thing looks similar is the relative strength on IWM. IWM takes the lead in during the first correction. So it makes a higher high while the QS is making a lower high, and it starts to to break out and forms another higher high before the QS is still below the previous high, and then the market the relative strength on IWM is a pretty effective sign of the breadth of the market breadth, and it could tell whether the market is really doing strong or not, or only focusing on on, on several stocks like the Magnificent Sevens. And yeah, we'd like to see the IWM continues taking the lead, and it's a little bit similar to what we are getting now. So the Qs is still under the previous high, but IWM has already making higher highs. I got stopped out, and in terms of this stop is actually a good stop, like, because if I set my stop at the low of day, then I would also got stopped out. So it actually helps me to reduce the risk by 0.5%, and maybe we'll need a little bit more time, or maybe I don't know. Could be the third try right here, and maybe we'll have a higher odds of getting another pullback, like the second leg down, the double bottom base. The mega caps are showing some weakness, and the leaders are the semi leaders are a little bit extended, so they could possibly also go sideways, or maybe drop a little bit into the 9 EMA or the 21 EMA. It could lead to another leg down, but I don't like prediction, and let's see whether the market is going to stops me out from my new trades, and I could get the feedback from that. And also the light in the space, the space themes are getting pretty weak. Rocket Lab is having a pretty huge volume. Red weeks, the 3 down weeks, and now it's following through to the downside, pulling back into the previous highs, but it feels pretty dangerous. Core Whip is also pulling back into the 50 EMA level. The weekly looks very good, and the pullback is actually pretty solid and healthy. Is still above all the EMAs. The weekly EMAs are turning up, and could be a spot to focus on, or at around 110, 9 EMA. I think I'm gonna take iron again on this 5-minute candle breakout. Martin, did you do swing trading in 2021? Or when exactly did you begin with serious swing trading? I actually do. I did swing trading at the very beginning. I think because the first few trading videos that I've watched is about VCP. It's about the market minis. So I actually at the beginning I was already doing swing trading, like trying to hold for days, like back then, because I can't hold for like weeks. I don't have any. I just can't hold a winner for more than maybe 10 days. But definitely at the beginning of my journey, I also tried day trading. I also tried options, but they aren't doing well. Personally, I think they are, I don't know, day trading maybe it's not it's not it does not suit my personality that well, because I have to show up every day. And also, back in early 2020, you've got a lot of gap ups, crazy gap ups, maybe gapping up 10-20% in one day, and for consecutive maybe 2 to 3 days you get a 10% gap up, the next day gapping up 20%. Then you won't be a fan of day trading because you are missing those gap ups. So you what you want to do is just buy a stock and then hold it overnight, because the next day your account will be up 10% or even 20% more. And for options, because it's a derivatives, and there are a lot more factors to consider rather than buying the shares as the simple stock. So it's really hard to trade options as a beginner, and I believe it requires a really good foundation for trading, to trade options. So I think I can trade options pretty well right now. It's like but definitely not me 5 years ago, 6 years ago. CBR is setting up pretty nicely. Hopefully it can go sideways a little bit more and letting the 9 EMA to catch up a bit. And to do a wedge pop, like and break out from the 21 EMA and the anchor VWAP. That would be great. But definitely it can go both ways. If the market continues to stay weak and goes lower, then it would be the 21 EMA rejection or the anchor VWAP rejection, and then falls right back. But right now I am not looking for the short side, because the market is really strong and in an uptrend. Let's see how it goes. Well, I believe that will be the end of today's stream. I've covered a bit of the weekend scan and the checklist, watch list management in the very beginning of the stream. So feel free to go back and rewatch it. Thank you guys for coming. We'll see you in the next one.